let's talk all things stock with Julia Weng from Paradise Investment Management via Skype. Good morning, Julia. Welcome to the program. It got a little boring there for a while talking about all-time highs from day to day, but as we know, and as we saw this time yesterday, sentiment is still a little fragile. So how does it feel sitting here at the top?
Yeah, thanks for having me on the show. The markets overall do look a little bit vulnerable. I mean, you've got this Delta variant, ripping through multiple countries, and as you said, there's still quite a bit of excess in the market. But I think on the whole, we have seen tremendous recovery on the back of very generous monetary and fiscal policies, and we've been watching the data very closely, and there's been successive months of strong CPI prints. And you're seeing, the stickier indicators like wages and rents starting to come through, and higher consumer prices being paid for everyday goods. So that's usually a prelude of a pretty strong economy. So I think, the markets overall looks toppy, but there's definitely pockets of opportunity. So I think from where we're sitting, we still think bond yields will trend higher. The central banks have shown this willingness to underwrite this recovery with loose monetary policy, and I think we can have inflation and growth at the same time. So I think from here, the bond yields should trend higher, and we're seeing opportunity continues rotation from long duration names to beneficiaries of rising interest rates.
So if we go back to rising interest rates like we did earlier this year, what sectors will outperform and what sectors would you choose to avoid?
Yeah, look, I think that the financials are the obvious beneficiaries of rising interest rates. So in that context, Computershare has 50% leverage to rising interest rates, but that's a 60, 90 day sort of rate. So, you might have to be a little bit patient, but, banks are having their time in the sun. So we're seeing pretty good credit data coming through. In particular, we like BOQ, got very good, strong credit momentum for both the BOQ and the ME brand as well.
So in terms of the banks, do you think expectations are pretty high? Because as you say, that loan provision has given a lot of money. ANZ yesterday announcing a buyback. So what's the risk that they deliver a lot of good news, but that's more or less as expected?
Yeah, look, I think ANZ is just a start, and there could be a lot more capital returns than it announced yesterday. So I don't think the expectations are high for banks. Look at where they're trading relative to the market. I think there is still earnings upside to come, so that's not being factored in. And we talked about where the rotation could be coming from, and I think there is still that rotation to come from the healthcare, the tech names that have been beneficiaries over 2020.
And we were just talking about commodities. I mean, some are saying avoid and some are saying they're still riding a super cycle. What do you think about that space in terms of commodity prices and your standard BHPs, Rios, Fortescues, etc.?
Look, it really depends from commodity to commodity. So, we look at from a bottom-up perspective. So I think iron ore obviously is still a very elevated price, but unlikely to go much higher. Having said that, BHP and Rios are still due a lot of cash flow back to shareholders. But we really like the battery material space. I think that's a long-term structural space. We've had years of underinvestment, but we're seeing this accelerated adoption of electric vehicles supported by government policy and technology advancements. So that should drive a sustained higher commodity price. So we like a lithium plays like Pilbara and Galaxy Minerals, as well as rare earth through Lynas.
Yes, Lynas, because Lynas and Galaxy, that mega merger, does that mean you still like both stocks?
Yeah, so Galaxy is doing that merger with Orocobre. So I think that synergy, there is a lot of synergistic assets in that process. So yes, we do like both.
And so they're all the ones you like. Is there anything you want to avoid heading into this reporting season?
Yeah, I think margins are top of mind for us heading into this reporting season. I mean, one of the byproducts of inflation is that seeing much higher wage growth in certain pockets, especially in WA with closed borders. You also see much higher freight. The the container, the cost to ship a container from Asia to US is still 5 times that of pre-pandemic. And obviously, you're seeing a lot of elevated raw material costs, whether it be minerals or soft commodities. So, definitely want to be picking stocks with good pricing power and genuine barriers to entry heading to August.
Well, fantastic. Round the grounds there from Paradise Investment Management. Julia, look forward to seeing you back on the program.
Thank you.